The topic is webinar on indirect tax provisions of finance bill, and it is qua GST because that is the flavor of the season. People are more interested in GST rather than anything else. Like all my presentation, on the right side you'll see that A, which is supposed to be, that like movies, you have A, U, and U. This is a very complicated subject. That's why it's A. And as regards the color blue, don't expect anything. It's just incidental. And being a liberal, well, blue is my favorite color. Next. Right. Okay. Changes to be effective from now. Before we start, let's look at when is the date it will be effective from. And I must also acknowledge Naresh, who gave me one or two hints on this. First of all, you see down only significant amendments have been taken. And the changes to be effective from a date to be notified after enactment of the bill as far as possible, concurrently with the corresponding amendments to the similar acts passed by states and union territories, except as mentioned below. So generally in GST law, when a budget is introduced, I think there is an understanding pursuant to the council decision with the states that once this is enacted, then it will be notified from a date which will be in tandem with the notification by the states and union territories after they pass the corresponding bill. Of course, there is an exception which we are dealing with it now. One is there is a retrospective change from 1st July 2017, amendment in section 53, which we are dealing with. It talks about interest on the input credit not correctly availed. Of course, this will be operationalized on a date to be notified in the government. So again, the states, everybody will notify together and it will get operationalized. But it will be operationalized, once it's operationalized, it will be effective only from retrospective effect, 1st July 2017. We'll deal with that. Then there is a substitution rate at which the interest was normally paid by, notified 18%, except wrongly availed credit was 24%. So they have sought to, put it in parameter with the output tax interest, delayed payment. And this will be operational automatically on enactment of the bill. On enactment of the bill, it will get operationalized. That is regarding, but it will be effective from 1st July 2017. This is what it is. We go to the next one. See, basically the broad scope of this budget change is you can deal with into two. And as Manish rightly said, that this is the input credit budget. Of course, not a very handsome, or a very welcome credit. In fact, we should call it debit. But let's see. So there are two things dealing with one, part A and part B. I have divided into two because one has to look at the basic, there's something called ABC analysis, which we all learned. So we should focus on the part A. Part B is more procedural. Of course, there are a couple of changes which are very important, which I'll deal with that. Amendments in the LGBT condition of taking ITC. There has been substantial change. And dispensing with the process and procedure for claiming ITC and matching of ITC. This is the part A I'll deal with, which is the most important one. Part B is the other changes. What are the other changes? Let's look at part A. Amendments in the LGBT condition for taking ITC. Dispensing with the process and procedure for claiming of ITC and matching of ITC. Now, if you look at the present eligibility conditions for taking ITC, it's there in section 16 of the CGST Act. First of all, you must possess a tax invoice. Second, there should be a receipt of goods or services. Third, the details of such supply has been furnished by the vendor and the same has been reflected in the return. And today the return is form GSTR 2B. Tax thereon has been paid by the vendor. The vendor also ought to have paid the tax. Information about claiming ITC has been declared in the return. That is GSTR 3. So just for a quick recap, A, you must have the invoice. You must have received the goods services. The vendor has put in his, reflected in his return. He has paid the tax and our claim should be reflected in the return. These are the 5 major things in section 16 today. What is being sought to be added to this, as if that is those 5 are not enough? And if you see in all my presentation, wherever it's a bit complicated, wherever you need to look at it, it will always be in yellow. Because those days, I remember the service tax law, they were very particular, you pay in yellow challan and not white challan. Because who were paying white challan were not getting credit. So it always struck me that this law is very much yellowish. Maybe whoever drafted it suffered from jaundice or for whatever reason, or racial, whatever it is. So that's why if you see in my presentation yellow, I think your radar should be up. You should be concentrating on that. So here, what is the additional condition? ITC to be claimed only to the extent it is not restricted in auto-generated statement containing details of ITC that will be made available by the portal. Now, as if those 5 things were not enough, they have now given a very novel section 38. Existing section has been dropped and a new section coming. And what the 38 says, we will let you know. But the section 16, which is the LGBT criteria, in addition to these 5 things, has brought in this also, that you will be allowed only to the extent that the ITC is there in the auto-generated statement, which is given pursuant to section 38, and the rules and entire mechanism will be prescribed. So let's see this section 38, which is going to be the fulcrum of not only today's discussion, but which will also be going forward one of the most significant things. I don't know whether the government can operationalize it. I don't know whether SSEs can operationalize and avail it. I think let's wait and watch. But certainly it's going to be very tough. So what is the proposed section 38 says? ITC, 2 things they are classified, ITC allowable and ITC restricted. So it says, following details to be made available by the portal to the recipient of the supply. Details of inward supply furnished by vendors. Details of other supplies as may be prescribed. Now the word prescribed again is yellow. It's very important. We don't know what is going to be prescribed. So one is the vendor and the other supplies. Maybe the RCM where you have to pay under reverse charge. Or it could be anything else. Maybe where there's TDS. Government companies and all will be deducting TDS. So we'll have to see how this will unfold. But first is the most important. What is given by the vendors. And second, of course, it will be prescribed. Let's wait and watch. Auto-generate, I'm sure, and the organizers should look into this. I'm sure that once these things are in place and everything is prescribed, you'll need at least a full day seminar or perhaps a 2-day seminar only on the ITC and section 38 challenges to correctly articulate what is it that they have put in the law, what is it that they have put in the rules, what is their intention, and what actually is going to happen. I think it would be certainly worthwhile to have another seminar on ITC. Auto-generated statement containing details of inward supply along with. Now this auto-generated, today everything is portal is the king. So the whole idea is that everything should be auto-generated. Now in principle all is fine, but how much is generated and what is not generated is going to be very important. And that is going to generate a lot of, I'm sure, heartburns for the SSE as well as the litigation. Let's wait and watch. Allowable ITC along with limits up to which it can be availed. This is what the section 38 says, that we'll auto-generate that. Then that is only allowable. In addition, there is restricted ITC. That means ITC will be restricted because of various reasons. And those reasons are really puzzlers. The real puzzle is there. We will try to see what it is. So this is most important what they want to say in section 38.1. Inward supply will be furnished. Other supplies also may be prescribed, will be furnished. They were auto-generated. Now the focus here is the auto-generated statement. That means, there will be a lot of interplay that vendors return whatever he's going to put. The portal will process, see where all the conditions which we are going to learn will all has been complied with, and due to some magic with all these things, it will filter and it will generate what is allowable ITC and what is the restricted ITC. Okay. Now, in the following cases, it says ITS. Now, what is the auto-generated? What is the restricted? Here, this slide's topic is, this is not coming for them. Not for them. Restricted input tax credit. What is the restricted input tax credit? In following cases, ITC, this slide is about restricted ITC, will be going forward. In following cases, ITC would not be available, wholly or partly, to the recipient where the vendor or the inward supplier has issued a revised tax invoice after obtaining registration, but the same has not been issued within the prescribed period of obtaining registration. Let's see what's this. Let's go to the slide 37. See, there is a provision that you start your business, say in 1st October, and then you have 30 days time to in fact, this is denial of ITC when invoice not issued by vendor within the prescribed period of obtaining registration. What is this? You have vendor 1, vendor 2. The vendor is starting his business on 1/10/2021. He has 30 days to apply for his registration. He makes the application on 25/10 and will be granted within 7 days, that is on 1/11. Now, if he has issued the invoice, at that time he didn't have registration. Okay. So he can, for 1 month, from 1/11 to 30/11, once he has received the registration on time, he can issue a tax invoice. Earlier he had issued a normal invoice during that period because he can't stop the invoice. But once the registration comes, he can issue a tax invoice within 30 days of grant of registration. So this is how the scheme is. But supposing a vendor here, see vendor 2, he applies for registration late. Then he can't issue a revised tax invoice for the earlier supply. He can issue tax invoice only post 7/12. Prior to that, whatever invoice is gone is gone. So then obviously what they want to say, the recipient will not get the credit. Now I'm sure in such cases, if you don't give a valid tax invoice, neither that person, your recipient, will pay the tax. So I think it will not be taken care of, but they want to say this, in this period, if you have issued a tax invoice, you will not allow the credit. And they are so sure that they will have a mechanism in the portal that this will get filtered and will be part of the restricted thing that will not be allowed. So this is the first impediment for the recipient. If the vendor issues a tax invoice and that is not in line within the prescribed period of obtaining registration. Then the second impediment is he has defaulted in payment of tax and the default has continued for prescribed period. So first default may be excused, but he has defaulted second month, third month. Then there will be some mechanism. That prescribed period is a big question mark. Let's see what is the prescribed period. Then maybe the portal will have some mechanism to filter that credit. And to that extent, you will not get it. So then the third impediment is total output tax paid is less than the output tax payable. That means there is a shortfall in the payment. Of course, there will be an issue if the vendor is supposed to pay 1 lakh tax, 1 crore tax, and he pays only 80 lakhs, then he will come under this. The tax paid is 80 lakhs less than this. So 20 lakhs he has not paid tax. Now, he will have several customers. So which of the customers will get that 80 lakhs credit? Or it will be some proportion. Or because he didn't pay 20 lakhs, the entire 1 crore who has purchased from him, nobody will get credit. That will be, we'll have to wait and watch. I presume the wording is wholly or partly. So I presume that if there is a short payment of tax, that instead of 1 crore, he has paid 80 lakhs. then the portal will have some magic formula or processing where each of their customer, that vendor's customer, will get credit 8 by 10. That is how it will, correct? That law it will happen, I presume. But we have to wait. Everything is on the portal. Portal must be having some magic mechanism. We'll wait. I'm concerned that this whole mechanism will be some sort of defined formula and will not be like a lottery ticket. That it should, we should be able to see it. So these are three things here in this slide: that obtaining registration, default in payment of tax, and default is continued, and there is short payment. The next one is very interesting. Cases ITC would not be available partly to the recipient where the vendor or invert supply, my vendor, has defaulted by claiming allowable credit in excess of the prescribed limit under this section 38. So this is a wonderful jigsaw puzzle. So what they say, I am the recipient. I am not allowed credit because this is restricted because of these parameters, which is, one by one they are saying. Plus in the vendor, he also has to comply with 38. And if any of his credit he has taken by not complying with section 38, then to that extent he will not get credit. So see how this will work. I don't know whether it will work. The recipient is R in this. Okay, to me it looks like a big jigsaw puzzle. In fact, I call this as reverse process of trickle-down theory. In those days when I learned economics in college, they called it something like the trickle-down theory. That is, if the budget, there is spending for various social things, it expects that you pay and there is a trickle-down and the last person in the value chain will get something out of it. But here there is going to be a reverse. Take the recipient as R and he will get credit depending on V1. That V1 is complied with 38. But if V1 has taken a credit on the basis of which the V2 has wrongly taken credit of V3, then V1 will not get. I hope it's clear. Same way, V2 will not get credit if V3 has taken credit from V4 without complying section 38 or something like that. And same way V5. So in short, look at the pail of water. A bucket of water is a credit. By the time from V5 it goes to V4, V3, V2, V1, it will become a glass. And if you notice the glass, in the pail of water, there is water. In the glass, you don't see the water. So that is how it will become. It will get dissipated. So I am supposed to see not only my vendor complied with section 38, I am supposed to see that my vendor V2 complies and V3 and V4 and V5 onwards. I think the whole intention is that I must, instead of concentrating on business, I am in the business of compliance of GST, of not only mine, everybody, and unless everybody complies with, I will not get my credit. If I don't get my credit, many cases where the margins are so low, I'm sure I will be in losses. So I'll perforce ensure that my vendor and his vendor and his vendor's vendor, everybody will comply with. Now people say I am not able to comply with my own compliance. How is it possible I will be able to see so much compliance? No answer to this. This is one issue. The second thing is at what time will R know how much IT is allowable restricted? Because this is a dynamic thing. At what point? Because it will go on, there will be a lot of transactions coming in. So there is no cutoff. Because by the time V1 comes to know V2, V2 comes to V3, V3 comes to V4 and V5, it will be a long time. So upfront I will get. So by the time this whole thing comes to, maybe it will take a very long time to know how much really I will get the credit. Then the mechanism of communicating about details to R. What is the mechanism? So it appears the mechanism to me, the way I look at it, that the portal will have some sort of a fantastic formula. There, from here, there, everything they'll pick up and they'll be able to find out V5, V4, V3, everything. and will tell the recipient by this is all the credit you will get. But the recipient will never know why it has happened, what it has happened. He'll be a total thing. He'll only see a figure. And then he'll see this man, he'll be scratching his head like him. Where is lost? What happened? Why it happened? Nobody knows. So again, challenges of operationalization. Now, today the government is going to scrap the matching concept because they could not operationalize 41, 42, 43A. So whether they'll be able to operationalize all this, that is another issue. You have nice sections and rules, but you should be able to operationalize. That, to my mind, is going to be a big question mark. Again, wait and watch. Nothing more I can say. But I hope this entire understanding, I'm not saying getting a solution to jigsaw puzzle, but understand that there is a jigsaw puzzle here and we have to wait how it will unfold. Let's go back to the main thing. See, all my presentations are like those, if you see those days, Mahabharata, there is a main story, and to the main story there is a further story, and to that a further story. That is how the whole my presentations unfold. That is why I am taking it to each slides. So here I have defaulted by claiming allowable credit in excess of prescribed under this section. That is, my vendor has defaulted, then I will not get credit. Defaulted in complying with the provision of the proposed section 4912. Fantastic. So let's see what this 4912 says. If I have defaulted, that is, if my vendor, most important now we are looking at the vendor here. If section 38 says if the vendor has defaulted, firstly on the top, he has claimed credit in excess of prescribed limit under this section. Because this section itself gives, if you saw the previous slide, all these things are required. If my vendor doesn't comply with any of this, or there is some restriction because of that, then mine, I will also, and I already explained V1, V2, V3. But in addition to all this, if this is not enough, he has defaulted with in complying with the provisions of section 4912. What does 4912 say? This is the section they intend to, which they always wanted. They say you can't pay everything in by way of credit. You must pay something in cash. But if you go on paying credit, where is the money coming in? Little realizing that the concept of GST is input credit. It's a heart of GST, cascading effect. So what the central government, they say, they are trying to empower themselves. Be empowered to prescribe based on the recommendation of the council and subject to conditions and restrictions. The maximum proportion, please understand, this itself is going to be a restriction and a condition that you can use only 90% of credit or 60% credit. But even that, for that, there will be further condition and restriction. The maximum proportion output tax liability that can be discharged by the registered person through electronic ledger. So the whole purpose being to pay some amount in cash. You have to pay some amount in cash. So 4912, they'll issue a rule to say based on these conditions, they'll prescribe a limit. They'll say that only so much you can use. Maybe it will be 5% you have to pay in cash or 10%. I'm hoping it should not be more than 10%. Now the question whether this can be challenged. Well, if you look at the provisions and the select committee of parliament, when they introduced wanted to introduce the GST law, one of the important things was that there should be no cascading effect. That's the basic fundamental of GST. So if you put a restriction on this credit, obviously there will be cascading effect. The next point is whether if it keeps accumulating, can you claim refund? There is no provision in section 54. Either it should be export for refund, or it should be excess payment of tax, or it should be for a particular invoice, or it should be that rate difference, that your input rate is more than the output rate. But there is no provision such a thing that it gets accumulated because of this. I hope they also provide that if it is accumulated for a very long time, refund should be allowed. Otherwise, it will keep on adding. And I already know some companies, because of many reasons, the refund, the credit ledger, they are not able to use it. Now, This is the basic fundamental we have studied on a standalone basis, that they are going to bring this restriction. But in section 38, what are they saying is, if the vendor, if he ought to have used only 90% and paid 10% in cash, he pays 5% in cash and 90%, 5% by credit, then I will not get the credit. So important, my vendor should pay the thing. And he again, if you look at the earlier one, the earlier provision, his vendor also should not do it. Anybody one does it, it will be a chain default. So this is a very important thing. I don't know how this will be operationalized, how it will happen. I think there has to be some magic formula. Let's wait and watch. Then as if all this restriction was not enough, it should belongs to a prescribed class of person. If he is in a prescribed class of persons, I think maybe composition or dealer or whatever, then you will not get the credit. That is also they want to say. So there has to, that is the final, keeping something pending, so that anytime they can notify this from this class of persons, from these vendors, you will not be able to get. Challenges of operationalization, huge challenge. Whether they'll be able to do. Important is whether they can do it. All these things may be on paper, may not be able to do at all. Atul, if there is any question which for some reason it's not understood, you can always tell me to repeat. Okay, I don't know, if it's purely of a legal thing, we can take it in the end. Yeah.
Sure, sir. Sure, sir.
But if there's something not able to understand or something which is an impediment, then you can interrupt me. So doing a doing a recap, what are the restricted? As I said, the registration, post-registration within that 1 month, within that period you have to issue an invoice. Your vendor doesn't do it. Your vendor has defaulted in the payment of tax. His output tax is, which he ought to have paid, is less than the tax payable. Then the vendor has not complied with this section 38, which I said V1, V2, V3. Defaulted in the complying with the provisions of 4912, that is, he ought to have paid only some amount in cash and he belongs to prescribed. All this, if your vendor has done all that, you are not going to get the credit. So in short, we have to wait and watch how this is going to happen. One section 38 can be one of the most difficult and the most challenging for the SSE. Then what is the way forward after the enactment of proposed section? What is the way forward? The recipient to claim ITC only after he has been made available the following in the GST portal. Statement containing details of inward supply. Auto-generated statement containing details of input credit which can be claimed allowable credit. Then which cannot be claimed or can be claimed partially claimed restricted credit. Will this credit be dynamic? Because it has to be dynamic, it will keep on changing. So then at what point of time? I think there must be some mechanism in the prescribed rules, or because everything is auto, they say auto-populated, auto-generated. We have to wait. As I said, portal is the king. So if you see this person, this is the time and this is it. So I think we have to wait. Section 38 says only one thing. Message is wait for me. Unless I have given you the mandate, you cannot claim credit. I hope the portal works, that we will see some credit in our that 2B. Other with all this, we may not see the credit. Somehow I am positive. My blood group also is B positive. So let's hope these things will not totally distort the credit which is available to us. What is the issue? Issue 1. In case of defaults by the vendor by way of partial or short payment of taxes, excess ITC claim, all his customers will be entitled to the relevant proportional ITC on the inward supply. Details available in auto-generated statement to the extent the vendor is in compliance or nothing at all. As I said, Out of 1 crore, 80 lakhs he pays, 20 lakhs he doesn't pay. The entire 1 crore, all his customers will not get anything. Or I think all of them will get, but it will all be 8 divided by 10. You know, that 80%, that mechanism will work, I presume, because the wording is wholly or partially, as we mentioned, the opening portion of the set. But how this is operationalized? Again, wait and watch. As I said, I hope it is not like those other sections of matching 42, 43, 43A, which was there in 2017. And after 5 years, they found it is not possible to operationalize, and they have abandoned the concept and brought in this new concept. But let's see what is, unless something, all these things are generated to some system, is going to be very difficult. And I'm sure this will take at least 5-6 months minimum, or perhaps even a year to operationalize. So till then, the existing provisions will go on. Issue 2, where the default is subsequently rectified. See, after all, the vendor keeps on chasing, and it is subsequently rectified fully or partially. What will be the mechanism to reinstate the ITC for the vendor's customers? Everybody will get V5 will correct it, V4 will get V4, V3, V2, V1, and recipient. What will happen? Is it lost forever or can be gained? There was that Milton's, I think, poem, Paradise Lost, Paradise Regained. So here, input is lost, but input will be regained. I presume the mechanism will provide that whatever is lost because of all this will be, true up is there and it will regain. And I hope they don't provide a period, because some of them may comply with not necessarily that September or November. They may comply with after a year or two. So I hope there will be some mechanism that this, at least this part of it, there is no time cap, and that input will be regained in some manner. But while it will be regained, in the interim, we are forced to pay because of all this with interest. That the interest also should be regained. That is also another issue. I think let's focus first on the principle, and then only we need to look at the interest. I presume the principle will be regained because the intention is only at the moment not allowed. Once they have done a proper due diligence, we should be allowed. How this will all work, it all looks very circular and very complicated, at least to me, with a simple mind. More clarity expected once relevant rules are prescribed. Let's hope the rules get prescribed, because sometimes sections are coming, rules take its own time to prescribe. I presume the rules will prescribe only once they have the software in place, how they, with their forms, etc., everything should be in place. Then maybe they'll prescribe the rules. So with all this section 38, which has brought in so many restrictions and allowable and restricted input credits. As restricted because A, that registration, then short payment of tax or payment at a for a prescribed period is not paid, or the other fellow has not complied with it, or he ought to have paid everything in some amount in cash which he has not done it. All this gets restricted, how it will happen. And once this gets restricted by the portal, whether later on things are trued up by the vendors, whether we should be able to regain our thing. I think we'll wait and watch how this will happen. So I had way back in 2017 itself says, because of all the restrictions, while the philosophy of GFC was seamless credit, I used to always say see less credit. Now I hope I don't mind from seamless credit to see less credit, but I hope it doesn't become see no credit, and then it becomes debit. Somehow I'm positive. I'm sure that they will provide a mechanism where all this will be taken care of. And slowly also the trade will keep things, put the mechanism in place. Then the next slide is some doubt on section 16(2)AA. See, if you look at now with all this, the recipient eligible to claim credit under section 62 only 16(2)AA prescribes to the extent ITC claim matches with the inward supply details GSTR 2B. Tax on the said inward supply paid by the vendor supplier to the government. Yeah. the supplier has to pay. And this is the new section. ITC on a said invoice supply is not restricted by section 38. That is what section 16(2)(ba) says. So these are the three things. First, it should match. Second, the other vendor ought to have paid. Third, it should not be restricted because of section 38. My only thing is, if the amount ITC eligibility claim is restricted into the auto-generated statement under section 38(2), a doubt arises then whether matching of ITC with GST would be relevant. Because that whatever you match, ultimately it should not be restricted by 16(2)(ba), 16(2)(ba), that is section 38(2). I presume there will be some mechanism that 16(2)(aa) and 16(2)(ba), which is pursuant to section 38, these new 5 restrictions will be synchronized. I don't know how it will happen. I think many of these things we learn only after the rules come. So let's wait and watch. I'm sorry you may be asking me, whatever I take it, you say only wait and watch. Well, I'm also helpless because they have provided a lot of enabling mechanism, and right now that enabling mechanism, or when it will be able, only time will tell. We only hope it will not be disabled. Yeah. Next slide I'm taking. Now, as I said in the part A, there were two things. One is the restriction on the claiming credit, and the major change in this process and procedure for claiming of ITC and matching of ITC dispensed with. So, we are aware that the portal was to match. How it was to match? The person who is the vendor, he is supposed to give the recipient the outward supply. Then it will get reflected in 2A, 2B. It is supposed to reflect it. Then as the recipient, if I find there is something wrong, I can, through the portal, give a particular form is filled up and tell what is the shortfall. Then as a supplier, he again has an opportunity to rectify that. And that is called matching. That is provisional matching. And after it is matched, I get an opportunity. That was very important as a recipient. And then the matched one is what the credit is. Then after that, again, there is a second round of, that is provisional matching. Final matching also was there. And this way, it provided for matching of ITC and also catching of ITC. Now, this provision was there from 2017. It was mainly there in section 42 and 43. And the newly introduced 43A in 2018. Though it was introduced in 2018, it was never notified. Now, all these three have been dispensed with. Why they have been dispensed with? It appears they couldn't operationalize this. And not being able to operationalize this, they said, let's forget about the matching and the catching. But we don't know that not doing this and introducing that section 38 which we discussed, that also has to be operationalized. Whether they will be able to do, sorry to use the same words, wait and watch. So here, if you see, this is ITC catching and this is a Gone with the Wind. Those days there was, I think, a book or a movie called Gone with the Wind. That is why I use this phrase. Now, look at the existing scheme of taking credit. The entire scheme of taking ITC involves the following process and procedures. First is eligibility. It should be eligible. That is the section 16. You must have, I took it, invoice, it should be there, receive, book, it should be received, etc., etc. After it is eligible, you have to take the ITC. And after taking, there was a process of cross-checking and reconciliation of ITC. And thereafter, there is something called the matching of the ITC. And then the final acceptance of ITC by the portal. And then there was a consequence of not matching of ITC in consequential action by the recipient and the portal. So I'm just quickly recapping. There was something called the eligibility of taking ITC, which was there in section 16. You must have invoice, you must have, receive the goods, etc. Then you have the act of taking ITC, which is there in section 41. Provisionally you can take. But having taken it provisionally, you have to cross-check and reconcile. And matching of ITC. These two were auto, which was through the portal matching. Matching was section 42. Then the final acceptance of ITC by the portal, because between this recipient and supplier, they have to agree. And if the recipient says, "Well, look here, you have not shown this," then the supplier has to again upload that outward, put that, pay the tax, and again give it to me. And then if he doesn't do that, what there are some consequences and consequential action by the recipient and the portal. All this was a very nice method. Of course, we who have been living in the earlier pre-GST era, I think we are quite happy. We said, "Well, look here, we have got the invoice. If I have wrongly taken, if the other fellow is not compliant, we will go to him." But they say, "No, we don't have time to all this. Look at everybody. In the portal, through the portal, I will control the whole country." It's a very novel method. I don't think any part of the world has got this. And their idea was all this. Let's look at this. What was their idea? I think I have drawn up a chart here, which is, I know it will also help you for future. This is a step-by-step process, and I have looked at it from 1st January because 1st January also there were some certain changes. Now, what does it say? Step 1, taking of ITC by the recipient 41. That is provisional. Whether operational? Yes, it is operational. Then the process of cross-checking and reconciliation of ITC. Step 2, that vendor has to file outward supply in GSTR 1. It is, yes, it is operationalized. Form GSTR 2A received by the recipient auto-populated from portal. 2A, now it's 2B. That is also operationalized. Then the second one, step 4 was there, but they have cancelled it. They have cancelled rules. But let's understand what is that philosophy. Cross-checking, reconciliation, verification, validation, inward supply details. ITC, they are not by the recipient. Because the recipient has an option. Let him have a look at it. And then he intimates to the portal, but you are not put this in, I deserve this credit. Just like income tax 26 AS. If I deduct tax from Sikant's payment here, and he in his 26 AS see it, he can come back to me and say, "But this is it," and I can re-input it. Of course, that is not in the income tax, not through the portal, it is offline. Here they made it online. And they wanted the portal was to be the judge who is right, supplier or the recipient. Intimate discrepancy, modification thereon by filling GSTR to validate establish input credit. So recipient wants to establish his credit. That is not operationalized. Never from 1st July. Then the communication of discrepancy of modification by recipient to the supplier, that was in GSTR 1A. That is also not there. GSTR 2 was not done. GSTR 1A also not operationalized. Then the supplier had an opportunity that he can accept or reject the discrepancy. That is also not operationalized. Then there has to be a generation of data based on the above steps in Form GSTR 3, which was to be automatic. That is also not operationalized. Making payment on tax liability. After doing all this, then the supplier has to pay the balance. Then filing of the return for tax period 3B. Yes, that is there. Making payment on tax liability before filing of return. Yes. So filing return and making tax payment, they are operationalized. Then matching. This was the most important part of GST. That is matching ITC. Claim with the corresponding detail of output supply by the common portal. This is not operationalized. Final acceptance of ITC by the portal. Matching of ITC provisionally claimed with the details of outward supply. Communicating the final acceptance of ITC by the portal claimed by the recipient. There is another mechanism called GSTR MIS 1, section 42(2). This is also not operationalized. This is the second round. Communicate a discrepancy between ITC claim and the corresponding outward supply details to the recipient and to the supplier. The GSTR MIS through. I know that since it is not operational, this is theory. But at the same time, what I want to articulate is, this was the process which was envisaged, based on which GST was introduced, so that there is no cascading effect. And while the portal mechanism will be very stiff, we provided for all this, so that at least the genuine ITC is not the recipient of supply, but he is not deprived. But imagine none of it is operationalized. Rectification by supplier. Supplier also could, second round also could rectify. That is also not operationalized. And consequential action by recipient and portal. Rectification by recipient. Recipient tries all this, nothing happens, then he can also rectify. And then consequences of not rectification. If you don't rectify, then the recipient has to be, it will be added to his tax liability. And of course, later on you come to know that the supplier has not done it and he does, you can get a refund of the additional ITC made to the output tax liability. Refund of interest paid also. Imagine the supplier at the first instance doesn't get reflected in 2B and you have claimed it. And the department says you have to pay with interest. And then there is a mechanism to intimate to the supplier through all these forms that by you have made a mistake. Then he later on corrects his mistake and I get the credit. Then I will be entitled to not only the refund of the ITC, but I will be entitled to the refund of interest paid on the ITC. So this was a very novel concept. And the whole idea was that I'm not deprived of any, ITC by your own yardstick or the portal. And I think it was maybe very theoretical, but at least the philosophy was guarding the recipient from being deprived of something and not putting the entire onus on the recipient. By the supplier is not good, I can't break my head, so you pay. That was not the thing. There was some, shall I say, compassion shown to the recipient. That all this effort will be made. Even then, you are not able to do, you will have to pay. And by chance you pay in the beginning, the cross-matching doesn't happen. And subsequently in 2 rounds you are allowed to match. Then I will give you a refund of the ITC along with interest. None of it could be operationalized from 1st July 2017 till today after 5 years. And now they say, I'm not able to operationalize, so I want to abandon it. So just look at it. What I'm just summarizing what this whole concept was in the philosophy. And unless I tell you this, once this is abandoned, just telling these things have been abandoned, I don't think the import of it will be appreciated by the audience. That is the reason I took you through this whole concept, to say that it was the recipient had an opportunity to fight through the portal as well as supplier to retrieve his credit. So these are the plus sides of the envisaged GST portal mechanism. Opportunity to intimate supplier through portal that some invoices are not reflected by in the portal. It gives sanctity to a declaration of output supplies by the supplier and claiming of input tax credit by the recipient. Recipient not deprived of his genuine ITC claim due to the negligent mistake of the supplier. Error warning to the portal that supplier is guilty of not loading, uploading or disclosing his supplies. Onus of the supplier to discharge tax on outward supply furnished by him returns so as to enable recipient to claim ITC. So if you see this mechanism, the recipient is not left in a lurch at the mercy of the supplier. He gets an opportunity. But look here, all these things, I have paid you the money, I have paid you the GST, it is not reflected. And also gives a message to a portal and a department, look here, yes, you people now also check. He has given me a tax invoice and I have intimated through this G-Star 2 and 1A and all that. Well, you need to look at it. Now, though this envisaged ITC mechanism, it was not operationalized. In the interim, while they could operationalize this, they found out one more method that is called the interim measure, a temporary restriction rule 36.4. Let's look at that. What does this rule 36.4 says? In fact, that is also something which I have been told to take it up, so hence I took it up. Rule 36.4 of the GST is the government's temporary measure to resolve mismatch of ITC claim in unoperationalized process. So there is a mismatch. Government doesn't want to lose credit. What is not matched? They say this fellow takes it and tomorrow that fellow doesn't pay. So they brought in something called 36.2, 36.4. And what does it say? Amount of ITC to be claimed. Time period. Atul, you keep watching whatever people are writing in case anything needs to be done at this stage, or we can keep it till the end.
Yes, sir. Yes, sir.
Yeah. So now amount of to be claimed, there are two columns. Prior to 9/10/19, what was reflected was A, non-reflected, which is B. You could claim both. From 9/10, they brought in a restriction. You can claim A, what is reflected, but non-reflected, you can claim either the non-reflected amount B or 20% of A. So that gets restricted to 20% of A. Then from 1st January, they again changed and said, no, it will be restricted to 10% of A. Then 1st January 2020. Then from 1st January 2021, they said 5% of A. And then they say 1/1/2022, nothing. Now just because they couldn't operationalize this, otherwise the recipient would have got an opportunity. Now the recipient is left in a lurch. He doesn't have the opportunity to make the supplier reflect in his return. They went on writing 20%, 10%, 5%. Now you get nothing. Absolutely nothing. All because you can't operationalize your portal and you can't catch your supplier, a vendor to see that he does it. They say, I have to do it. So today, if it is not reflected, you will get nothing. That is the most important thing. Now, just look at it. The philosophy and background of the introduction of Rule 36.4, as per the detailed agenda notes and minutes of the 37 GST Council meeting held on 29/2019. What is the philosophy? To overcome the issue of unmatched credit being claimed without any legal impediments, a scheme of matching credit under GST system through GSTR 2 and 3B. 2 is the one which, as a recipient, I could have intimated. And 3 is what final, after all this, it will come to me. Could not be operational because of technical glitches in the portal. That is because you could not operational, why are you restricting me? Start operationalizing the portal, no? Or just say, I have a valid invoice, please give to me, go and find him. You don't want to find him. You don't want to operationalize the thing, just you say only match. Only what is matched you will get. Now, important thing is there a legal backing to this? ITC, that is very important, whether it can get some arguments as why 36.4 is still operational even today. Can we argue? Yes, we can certainly argue. ITC not matching the supplier cannot be denied to the recipient. Can be denied only on the completion of the entire process of taking, cross-checking, reconciliation, matching of credit and consequences of action by the recipient and portal as emissaries GST law, which I told you in that column of fashion. If you are not being able to do, but this process is not operational, not in place. Because today, till these things are, these budget provisions become effective, that matching provisions are still there. And because you couldn't match, you are not giving me, certainly we can challenge. Denial ITC based on GSR 2B without giving an opportunity provided by law to the recipient to either amend this claim or substantiate this claim by ensuring supplier makes corrections contrary to GST law. And there's something called impossibility of performance. I can't do something which nobody can do. Certainly you can argue. There are cases. Mere fact of non-reflection of ITC in GSR 2B does not mean tax has not been paid by the supplier. Invoice details may not have been uploaded by the supplier. We know these cases. We also know that the supplier by mistake has put under B2C instead of B2B. So because of all this, if that recipient mechanism was there, GSR 2, if I had intimated supplier, would have looked into it and he would have seen it is B2C. Even section 43A, pending to be notified. Funny thing about 43A, it is today sought to kill it before it is born. They are thinking, the proposal is to abolish it. It was brought in 2018, from a date to be 2018, from a date to be notified. It was never notified. So they had killed it before it was born. But the purpose was good, which empowered the government to prescribe maximum amount of ITC that can be availed on the basis of details furnished by the suppliers. Also did not envisage automatic reversal of ITC at the recipient's end, and merely on non-reflection of supply details on the portal. So here also you look at the agenda notes. 43A envisaged, and 43A also wanted to prescribe a limit under 36.4. 36.4 rule would have better teeth if 43A was in the books. Now 43A not being in the books, where is your power for the rule 36.4 to restrict it? I doubt they have any power to restrict it. But be as it may, I think portal is the king. The portal will decide whether you can go or not go. So if there is a signal, supposing in a road, and the signal is not correct, it's not working at all, everybody crosses the signal and goes. But instead of the signal, there's an automatic fatak and it just stops you, though it should not have done. I don't think you can go, you have to just stop. And again, the same concept, that fatak comes, you just wait and watch. So coming back to the original slide, these things we are though envisaged, they are not operationalized. So what the government has done, they say we are not appears government is not able to operationalize the envisaged ITC mechanism encompassing the GST law. They are not able to do. So what do I do? In the process mentioned that step 4 to step 7, cross verification, two-way communication process. They call it two-way communication process. In the table have been abolished. And how have been abolished? By abolishing section 42, 43 and 43A. 43A, as I said, dead before birth. GST Amendment 280 but not notified. It was by 2018 this 43A was brought in. So I think what has happened is, it appears that the software and the portal rules the law. We have always thought the rules, the software should be prescribed, be as per the law provided. But I think that now the law is being framed depending on what rules can be made effective and how software can be done. If software can be done like this, the law will be like that. So I just don't know how this will, the philosophy and the logic. Substitution of section 38 and section 41, they have substituted that. And introduction of a new section 38, which we have just dealt with, providing unilateral restriction on the available ITC both by the CGST law and the portal due to the misdeeds of the vendor. The vendor does it, unilaterally you will not be allowed. That is what section 38 says. This is the entire thing which has happened in this budget. The entire process of all this has been abolished. They say, I am not able to formulate it. If I cannot formulate it, I will abolish it. I wish I can also say, I am not able to follow this, and these people are not giving me anything. So either I will claim 100% credit or I will not pay tax. Can I say that? No, because I am not governed. So this is the most important thing, that this 38, how it is going to do. And sometimes while the overt objective of the government is fully appreciated, that one should not claim credit which is not due, one should not, when tax is not gone to the government's pocket, somebody getting they don't want, they also are worried about fake invoices. All this overt objective is appreciated. But what about the compliant, honest taxpayers who has paid the tax? The philosophy of GST is no cascading effect. Is it fair to him? That is not. That is the most important point. Why should, I think by and large, people want to follow the law. Why? A few people are doing something wrong. Why everybody should be penalized? This is the thing one needs to ask to oneself. Onerous responsibility is being cast on the recipient taking ITC to do. So the recipient has to is responsible. He has to do his due diligence before dealing with the vendor, and he has to ensure he has complied with the GST law. First of all, he has to see that the vendor is do a due diligence before he, there's something called vendor validation cell. Before every year, every time a new vendor comes, you need to have a validation. That is a compliant person. And you have to also, that is not enough one-time validation. Ensure that he is regularly compliant. I know you're going to ask me, I am myself finding it difficult to, whether I am complying with. How can I check out whether my vendors are complying with it? Anyway, that's something what the government wants us give a message. You also ensure that in your own interest. And also ensure all his vendors have been compliant with. So you have to ensure that, see that the vendor himself has got a system to see that his vendors also comply. Then his vendor's vendor and so on also are compliant with the law. So all this is going to be pretty tough. But you'll have to do it. It appears. Otherwise, there could be what they call a real cascading effect or trickle down, opposite of trickle down theory. Recipient claim ITC to follow up with the vendor to ensure that supplier disclose the supply made by to the recipient in his returns. So recipient will take the initiative. Like today we take the initiative at TDS 126 AS. So like that we'll have to do. Paid the tax in the supply, ensure that he has paid the tax, and also that he does not commit any of the defaults mentioned in section 38. He should also not. So I don't know how this will be operationalized by corporates. Whether they will say that we'll pay you the GST only we see the credit. But then I think I don't know whether that's possible. Second thing is whether have some sort of bank guarantee that in the event we don't get any credit, we'll encash the bank guarantee. How this will, and then it will be enormous paperwork. That will also be enormous paperwork. So I think there's a very onerous task on the recipient if he wants to claim credit, that his vendor complies with the entire law, and to ensure that none of the defaults mentioned in section 38(2), which I had earlier articulated, is done by him. Then look at section 41. Changes happen. The existing dispensation was ITC is taken by receiver on a provisional basis. That is what section 41 says. And this ITC is intended to be matched by the portal with output supply, details furnished by vendor, etc., which I have dealt with. What is the proposed amendment? ITC taken through form GSTR 3B will be considered self-assessed ITC, not subject to any matching process on GST portal. So there will not be any matching at all. So that will be treated as not a provisional one, but a self-assessed thing. So self-assessed is very important. So later on, if they find anything wrong, you assess on your own. So all the consequences of wrongful availment will come. If it is found that tax payable as a supply has not been paid by the vendor recipient to reverse ITC along with interest. So if the other fellow is not paid, then you will have to pay along with interest. So you may ask me, wasn't there a restriction already in section 38 and the portal will already compute that, and only to the extent of tax he pays, you will get the credit. I think somewhere down the line, if you see in that, it also said, just see this. Defaulted in payment of tax and defaults continue for prescribed. So what happens is, if the first pay is not a continuing fault, it's one time, then maybe the section 38 may not be flagged and you may get the credit. But if the other fellow is not paid and you take credit and later on is found that he is not paid, then the recipient will have to reverse it along with interest. Of course, I know there are two judgments which says that it is not, first of all, impossible, and this is not correct. This is not correct law. We will see how these are high courts, how the Supreme Courts will view this, whether such a restriction can be placed, that how can I control whether that fellow pays or not. So it's very important that, I don't know how, maybe we'll have to, every input credit We have to keep some elapse of time before you claim. Of course, now the interest is payable only if you claim and also utilize it. So this is very important that if the vendor is not paid, I will have to reverse it along with interest. And maybe you come to know only after some time. May not be immediate. That's why I said the timing is very important. If vendor makes the payment of tax and for such supply, the recipient is entitled to re-avail the ITC credit. You can re-avail that if later on he pays. The manner for reversal of credit, interest applicable thereon, and the manner of re-availing the credit would be prescribed. So reversal of credit, interest applicable thereon, and the manner of re-availing the credit would be prescribed. So they will prescribe that. Let's wait and watch. There are so many. In fact, this entire budget is full of prescriptions. Okay, it reminds you of your doctor's prescription. Everything is going to be prescribed. So let's see how big the prescription is. Okay. Issue whether recipient will be entitled to re-avail the interest also, that is not very clear. Because under the erstwhile section 42, which they have sought to abolish, there is a provision for re-availing the interest also. To re-avail in case the credit is wrongfully taken, it is reversed along with the interest, and then the supplier pays. You can claim the credit again and you can claim the interest also. So this is not there in this existing dispensation. Let's hope we can make a representation and say that if old section 42 had that provision, then this also the mechanism should be there that when I re-avail the credit, I should be able to re-avail the interest. Otherwise, what will happen? Both the government, if the re-availment is not allowed, then both the vendor and the recipient will be paying interest on same amount. That's unduly enriching the treasury. That's not correct. So there should be, because the supplier, when he delayed payment, he would have paid the interest. Now I reversed it earlier. Now I'm re-availing it. Obviously, I should be, whatever interest I paid at that time when I reverse, I should be able to get it. And that was what there in section 42. If it was there before, there's no reason why we should not have it now. Now, the entire process ITC in GA, it reminds me of my algebra, where that A1, A2, A3 to the power of AN, that is V1, V2, V3. And geometry, if those who studied those days in the 70s, riders and construction, these were based on theorems, and there were complicated things that how to construct. The line will go this way, this way, this way, this way, and then it comes. So it reminds me of this. Let's wait and see. Hope this will not be this V1, V2, V3 and stop at V1. Now, these are the major, if you ask me, the major thing was on the input credit mechanism with all that. There are some changes which out of this, not all of them are important. I'll take the significant one and run it through that, because I understand there may be questions also. Now, what are the other changes? This is a very welcome change, the first one, that what they want to say is that if you have any tax, interest, penalty or any other amount in the electronic cash ledger of a registered person, you can transfer it if you want to this to the next of your same registration. Like in the electronic cash ledger or master branch of a company, whatever the cash ledger amount is there, you can transfer to the registered Gujarat branch, provided there is no unpaid liability in the Maharashtra branch. So they want to say, because money is the same, I think this is a good welcome thing. Only thing, here you can't transfer the credit because credit has to be transferred either by the distributor ISD mechanism or by inter-office billing. Here the cash part of it, you can transfer. If Maharashtra has got too much balance and there is no liability there, you can transfer to the Gujarat. The second one, I think I already dealt with. It says you have to pay some amount in cash. You can't pay the entire liability through credit. The next one, these are all only, I don't think I need to spend much time on this. These are all time limit which is prescribed. I think by and large, if you see the time limit for availment of credit in respect of an invoice debit note pertaining to a financial year, there was some time limit. And that was due date for filing the return for the month of September, that is January 20th October, the following financial year, or the furnishing of the relevant annual return. Now they have said they want to cap it to 30th November of the following financial year. Because what happens in all this lockdown, they used to keep on extending. So they said, let's keep it for November, 30th November the following financial year, or the date of furnishing of the return, whichever is early. Then you have time limit for issue of declaration of credit notes in the return for the adjustment of value of supply. Again, you know that there is a reference to 30th September, that will be now 30th now. I think this being a columnar fashion, I'm skipping fast. And Atul, this will be available in the public domain for anybody to refer. Then I can slowly skip this. Atul?
What, sir?
This presentation will be available to everybody?
Yes, sir. If you allow us.
So then, you know, maybe I'll go fast on this because it's only a dates which anybody can refer later on. Time limit for rectification errors or omissions in the statement of outward supply. Again, this was also based on the following 30th September. It has been made to 30th November. Time limit for rectification errors. Again, this was also for the September. It has now made it to November. Then you have rectification of the TCS returns, same. Time limit for filing monthly returns by non-residents. Earlier you would get 20 days from the end of the calendar month. Now it is 30 days. So these are all, you know, change in the time limit. Then what's the liability for the other cancellation of registration? So compensation SSE, if he has not furnished returns for 3 consecutive periods, then there is a liability which will be invoked. Here in the proposed one, they don't want to keep for 3 years. It will be 3 months from the due date, that is 30th April is the due date. So the return of finance is not furnished. This case of compensation SSE, normal SSE is if he has not furnished returns for 6 consecutive tax periods. The tax period is a month, so 6 months. Yeah, it will be prescribed, the period will be prescribed. So these being all very procedural, I am not dealing with nothing much to comment, they are all factual. Then it says the next proposal, except in notified cases, bar on furnishing statement outward supplies pertaining to tax period, the details of any of the previous. So what it says, that there is a bar that if you don't do April's month GSTR1, May you cannot do. So they want to have an enabling provision, except in certain cases, the fact that you are not filed in April, you will be allowed to do in May. Then persons who opted to file quarterly returns under the proviso of Section 30 and a small taxpayer to give an option to pay either a self-assessment tax or an amount as may be prescribed. Then furnishing the statement outward supply pertaining to tax period a condition precedent for filing the return for that tax period, except when present, this is not a condition. So what it says is, in order to file the GSTR and 3B to make the payment, you must file GSTR 1. This condition is a present condition. No, I think there is no such condition. Now they are bringing it, correct? So what they want to say is that you have to furnish the GSTR 1 pertaining tax period, a condition precedent for filing the monthly return. So this condition is not there in 3910. So they are saying, if you want to file the 3B, you ought to file GSTR 1, correct? Except they provide some notified cases, some concession. Levy a late fee of 100 per day subject to maximum of 5,000 for failure by electronic TCS flyers to file their monthly statement of outward supplies within 10 days. Then the refund of any balance in the electronic cash credit shall be made in such form and manner as may be prescribed. Present the proviso provided to claim such refund through the monthly returns, though there is no provision GSTR. Of course, there is that GSTR RFD, correct? RFD is there. So they want to operationalize by way of a section because the proviso says such refund will be claimed through monthly returns, but they are already provided RFD. So now they are saying refund of any electronic cash ledger which is there, that will also be in the form as is prescribed if anybody wants to claim refund. Because I think the previous budget you were allowed cash refund. Yeah? Now they want to say that the form will be as such. Presently, only refunds due on account of zero rate supply inverted duty trade structure can be withheld if the claimant has defaulted in furnishing return or is required to pay any tax, interest, penalty pursuant to law. Now the bill has said any refund they can withhold if there is liability pending. Then in case of SEZ, the issue was what are the cutoff date for 2 years? Because in case of zero rated supply, services to a SEZ developer, relevant date, the starting date from which the period of 2 years for claiming refund or ITC tax paid on zero rate supply is to be reckoned with a due date of furnishing the return in 3B in respect of zero rate supply. So even I supply to SEZ, it is zero rate. And I can claim credit of my input credit. The issue was what is the relevant date? Now they say the relevant date will be 2 years from the date of furnishing 3B. Now this they want to say in the circular, TRU circular, that this is a clarificatory amendment. And the explanatory memorandum also says. So maybe you can say this may have a retrospective effect. 1st July 2007. If you are stuck up with this, what is the due date for such refunds, input credit to supplies to SEZ? You may be able to use this as retrospective. Then you have retrospective means, this is very important, a retrospective amendment section 53B with effect from 1st July 2007. This will be operational on a date to be notified after enactment of the bill. Of course, this has to be also done by the states. Now, what is the existing dispensation? It says specified interest payable in case of undue excess claim of ITC. This is what 53 says. Section 53 is to provide for interest when you have excess claim of ITC. So specified interest payable in case of undue excess claim of ITC under section 42(1). Undue excess reduction in output tax liability under section 43(10). Now 42 and 43 are sought to be abolished. So the proposed amendment will say specifies interest payable on ITC if ITC is wrongly availed. But now they have brought in one more welcome measure. It should be wrongly availed and utilized. Then only interest will be, provisions will be invoked. The earlier dispensation only talked of excess claim of ITC. It did not talk of, so even if you are wrongly claimed, you will have to pay interest. Now if you are wrongly claimed, avail, and only if you utilize it. So suppose you have claimed 3 lakhs somewhere in say 2021. And throughout till today, your input credit is always more than 3 lakhs. Then obviously you can say articulate that I have not utilized it. And if I have not utilized it, the interest provision should not be invoked. Of course, I know cases are still going on. And this is sought to be from 1st July 2017. So if it is from 1st July 2017, unless this is notified and operationalized, we will have an issue for those so-called notices, as well as we have got cases where investigation is there that you have to pay interest. But maybe you'll have to tell them to hold on or not to pay interest. And when the matter comes up, we can invoke this provision. Let's hope it gets operationalized as quickly as possible. I've generally seen it's taking 8 months or 9 months to operation. Then we have the retrospective amendment rate of interest payable under section 53. This is very important. This gets operational immediately on enactment of the bill. The existing rate was 24%, which was a bit skewed because on the output tax it was 18%, but the input credit wrongly availed was 24%. Now they have made it retrospective rate of interest 18%. What is the implication of the amendment? Similar interest rate under state tax also should come. So similar amendment they should make. And no mention of refund of if interest paid under section 53 in the past. Suppose in the past you have paid 24%. And now because of this amendment, it has a retrospective effect. Then you would have paid 6% more. Whether you'll be able to claim a refund, I think we should try. Certainly there is a case, but let's wait and watch. Conclusions. I think I would like to conclude here. Some important impact of bill on GST. Since the operationalization of the system was difficult for the government, the novel mechanism of matching ITC through the portal, which is referred to as the two-way communication process, has been given a burial. The restriction of ITC based on the vendor's misdeeds strikes at the root of the GST framework, a tax which is supposed to have no cascading effect. So this section 38, it strikes the root. This is not what the GST I was promised. This is not the GST which I saw. So somewhere down the line, there is a very big disconnect. Some important impact of the bill. This may impact the cash flow. This sort of restriction come. Result in micromanagement of compliance. Because then, it becomes, as it is, compliance is becoming difficult. Further micromanagement. Pose anonymous challenge of vendor management. Create distortion in vendor selection. Because now the vendors will be selected not based only on price and quality. But you also see that he has the bandwidth to comply with GST and ensure his vendors compliance. So, everybody in the trade would be in the business of GST compliance. They are in business and they are in the business of GST compliance. So, I think the whole purpose is, at least the overt purpose is, that it is in every businessman's interest and his duty that not only he complies GST, but his partners in business like the vendors and customers, especially the customers who are B2B, should also be compliant. That is what perhaps the message I get from this thing. Okay. I come to the end of the presentation. And my last slide is always the thing. The left side is a lighthouse. The right side is confused person. You have to just judge whether I've thrown some light on the subject or I've confused you. As I say always, confusion may not be attributed purely due to my default, like section 38(2), but is also due to the way the law is unfolding itself. But as I said, I'm very positive. Somewhere I feel maybe just like 42, 43 was abolished, this section 38 also may be abolished because it's very difficult to operationalize the whole system unless some sort of formula comes into place. Let's wait and watch, as I said. With this, I think I finished my presentation.
The portal does not take a negative figure.
Yeah.
And that is the issue, because if in any 1 month I have more credit because of credit note, and it has to be carried forward, no mechanism, and next month again I will have to adjust it, that excess unadjusted credit.
Correct.
So in that case, my GSTR1 will be showing tax liability, and the 3B may not show any liability or lower liability.
But this is not, I think today it is out of syllabus. This is not pursuant to this budget provision. No.
So default
problem.
No, default. How in this new system also it will throw the whether I am defaulter or not.
No, this new system also, the way it appears, you have no say in any of these things. The portal will, due to some magic, will tell you from under section 38 to how much you can take. That is all you must take.
Okay.
It appears.
Okay. Thank you.
There is no operationalization by you. That is what it appears. If you look at section 38, it says I will do two things. I will give you allowable credit. I will give you restricted credit. And then that is all. You be satisfied with that. You don't decide how much you have to take. This is what I see, and of course everywhere it is prescribed. There is a big box of medicines which will be prescribed. Let's wait for the prescription.
Thank you, sir.
But thanks for your question. Yeah.
Actually, I just wanted to know whether you had addressed this amendment. Actually, I missed the section for 5 to 10 minutes due to connectivity issue.
Yeah.
So my question is that since the amendment made is such that the due date of September has been substituted by 30th November.
Yeah.
I want to know that by can I claim ITC up to November's return due date or October's due date?
No, it is only 30th now. They just don't want they don't want to connect with due date because lockdown, what happened? These due dates keep on changing.
Yes.
They say forget about all this. 30th November ke pehle kar do, bas.
Okay, so according to you, the view is or the interpretation is October's return.
No, not in October. 30th November you claim, but whatever returns are to file before 30th November.
Okay, whatever returns we file before 30th November, no specific.
Supposing you may have got a extension of August or September.
Yes, okay.
You can claim.
Okay. So no specific return period as such, but a specific date.
Date, correct.
Yes.
Okay.
Whichever return before that, yeah.
Okay. Thank you.
Yeah, welcome. Yes.
Sir, can I speak?
Yeah.
Nakus.
Who's it? What's his name?
Yeah, Kush. Sir.
Yes, Kush.
Sir, in this connection only, can we take a stand that we have claimed the return in our books of accounts up to 30th November, and so we should not link it with the returns, but link it with the books of accounts.
Oh, that argument is there even today also, no? But we tested.
Yeah.
Yeah.
No, today they are specifically writing due date of filing of the last day to avail is the due date of filing of September return or annual return, whichever is earlier.
Correct.
And now they are mentioning 30th November.
No, but due date before that you claim in the return, you can still same argument will come, no?
Okay.
We say books of accounts and all that, all those things will follow.
Okay.
But I would say better stick to the
returns, yeah.
Because what is claiming can be an issue. Yeah.
Correct.
Also, sir, one more question. Could you just elaborate more on section 49, subsection 12, proposed amendment?
That you have to pay in cash. That's all. They are going to come out with some proportion. They say if your tax liability says 1 crore, you can't use the entire 1 crore credit and pay.
So is it in line with rule number 86B, where they had specified that at least 1% of your tax?
Correct.
It is just to give power
Maybe
to that rule.
it's better to, you're right, it's better to give feet to that, but I hope it is 1% and not more than 1%.
Yes, currently
because
it is
1%.
Enabling,
because if it is enabling provision, the problem is that 1% becomes 1%. Okay. I remember Palkewala, way back when this service tax was introduced at 5%. I'm talking of when I heard him in the budget in 1994. And they are all visionaries. So he had told at that time, and only 3 services had come. I think stockbrokers, insurance, and courier, telephone. And he had said this 5% thing has come, and on 3 services, and I think the budget was something like 200-300 crores. Because by the time service tax died and became GST, it was almost 1,25,000 crores. So he had said, please remember, I think it is time for you to protest because this 5% will not remain 5%. And this will not be 3 services. 1994, he said. You see what has happened. That 5% has become now how much? 18% and 28% on services. And because we have never known what is called service tax. And the number of services, everything became to a point in 2012, everything is taxable except some. So I think what's worrying is that 1%, okay, the reason which you wanted to do was because you wanted to be sure that people are in the net of payment and the return is 3B with some payment. But if that 1% becomes 5% and 10%, and there are companies whose margins are very low, because some of the wholesalers in telephones and all, their margins are earlier 1%, less than 1%. Then the credits will keep accumulating. And if accumulates, whether there is a provision to claim refund? No. So that is the only worry, that this enabling provision is, you are very right, to operationalize that 1%, to give sanctity to that 1% under that rule. But I hope that 1% remains 1%.
Okay, thank you. And one more question.
Yeah.
Not about the proposed amendment, but then there's this under section 16, it's mentioned that we can claim ITC, whichever is seen in 2B. So suppose say if there's no ITC, that is to be seen in 2B, but in my books I have ITC. So should I claim ITC?
That now this rule 36, if you're going to follow rule 36.4, it says unless it is seen reflected, you cannot claim. That's what they want to say. And this new section also wants to say the thing, automatically it will get restricted.
Okay, so I should not
Want
claim.
to see, that is why I said seamless credit becomes C-less credit. And if you want to claim something which you don't see, then you can only say, we'll see. That's what the department will say. And it's not that you cannot contest. You can certainly contest. But then you should be ready for litigation. Yeah.
Thank you. Thank you.
Yeah, Shraddha Sangvi wants to.
Yeah, sure.
Hello, am I audible?
Yes.
Yes.
Yeah, so my question is, what will be the fate of Bharti Airtel decision of Supreme Court, where it was held that credit can be taken on self-assessment basis, on the basis of what you have maintained, and it was specifically held that GSTR 2A is only a facilitator to get the IT.
Yeah.
So whether that decision we can.
I think they were on, if you look at it, no, I'll have to deal with a lot, but I think they are on very specific things. You know, so I don't know whether that can be carte blanche applied to all. Yeah, I have doubts.
Okay.
If I do start that, you know, that will be a very long, you know, process to take it. Yeah, maybe I don't mind, since you know each other, we can discuss offline also. Yeah.
Yeah, okay.
One of my clients' case, we have filed a combined application for refund of ITC.
Yeah.
And it was for financial year 18-19 and 19-20.
Yeah.
Application was filed on 3rd April 2021.
Yeah.
Department has raised deficiency issue.
Yeah.
Now, is it because those 2 years were lapsed for 18-19?
I'll have to see that. No, without seeing that, how will you know?
Because now I have decided to at least make separate application for 19-20 before.
No, it has to be separate. It is a year, you know, see, in a year, between months, you can keep it. Different. You can have for 1 month, 2 months, even. But a year, it should be for that year only.
Okay. Now for financial year 19-20, what is the last date for making refund application, sir?
19-20. You have to look at the relevant date, no? Foreign currency. It is dynamic. It depends. You got your foreign currency money.
Then a year and 2 years is to be counted from the date year.
Foreign currency date, no. Just look at that FRC date. Am I right?
Okay.
Yeah, you have to look at the FRC date. See, I'll tell you what we have done. We had a similar problem. So we gave a list of the invoices and the corresponding FRCs. And if the FRC's date is falling within the 2 years, then there's no issue.
This ITC is refund is due because of capital asset was purchased, sir. Machinery.
Machinery. Okay.
Yeah, in INR, Indian rupee.
Okay, it was in INR.
Yeah.
No, but it is a thing because of zero rated, no?
Yeah.
So when it is zero rated, it depends on the FRC.
Okay.
Look at the rule. Which rule is it?
Inverted tax.
Look at section 54. Relevant date. Okay. Relevant date. Yeah. You look at the explanation to section 54.
Okay. So relevant date is 2 years from the date of
FRC. Where the
if imports have been made.
It is a service exported out of India, where the refund or tax is payable and such services themselves, or as again inputs or inputs used in such services, receipt of payment in convertible foreign exchange, where a supply has been completed prior to the receipt of such payment, or the issue of invoice where the payment of the service has been made received in advance prior to date of issue.
Payment in this budget, sir, for claiming refund. That 2 years date starts from filing of Form 3B.
No, that is for the supplies to SEZ.
Okay, only for SEZ.
Yeah. That is only budget change.
Okay. Thank you, sir. Thank you.
Welcome.
Yeah.